I think it's about that time of day again here, folks. Back in the action once again. Hope you guys had a great weekend. Feels great to be here with you, though. Happy Monday to you. Monday evening. Time to get back to work and a lot to talk about in tonight's video newsletter. And of course, it is Monday evening. It's September the 16th, 2019, kicking off the third week of this month of September. And as always, right, my name is Joseph, and this is your nightly newsletter. Now, in case you're here for the first time, guys, don't forget I help traders find high-quality trade setups using a very simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job's a little bit different tonight. Tonight, I'm going to help you guys find the best levels of support and resistance, the best entry and exit points for tomorrow, and most importantly, how to avoid some common rookie mistakes for tomorrow. That's Tuesday's trading session. And we're going to talk a lot about tonight, some charts, got some oil, the S&P, Nasdaq, gold, and euro on the charts tonight. We'll grab the calendar because it's Quad Witching week, it's FOMC week. We have a lot to cover. I'm going to talk first tonight, though, on that black gold, because unless you've been living under a rock the past 72 hours, you know about the situation happening in the Middle East, and of course, that's caused that big aggressive move higher. But I think there's one big clue that not a lot of people are seeing on this oil, and that is a tiny trading range and the pendulum swing. Let's jump into that oil chart, that black gold, that Texas T, and let's see what's happening here now on the oil futures. Now, I don't want to go into too much detail about what happened here, but those explosions, right, those drone attacks, those pipeline interruptions produced pretty much the biggest, what they're saying is the biggest all-time one-day spike, right, about a 10%, right, jump in oil prices pretty much overnight from 55 almost up to $64 a barrel there, basically because those two drone strikes knocked out about 5%, right, of the world's crude supply. So quite an effective little drone those little guys are, right? They knocked out a good chunk of oil supply, and the market obviously, right, jumped higher. Now, when it jumped higher, you'll notice this little tiny range that formed here, right? And that range that formed overnight, look at these pendulum swings back and forth. Pendulum swing, pendulum swing, pendulum swing, and I'm guessing we've got one more pendulum swing under our belt here down to that, right, down to that 58.67. So we know what kind of range bound here. There's definitely an overall bull bias, but we have a setup here setting up on oil. A beautiful opportunity for what I call a crown reversal. That strong move up, they failed to retest the high and gave us that strong move coming off of that high. Now, if I zoom back in this chart now I can see I've got that pendulum swing above, that pendulum swing back down below. That gives me now where my objective is for tomorrow. Now I just need to find a way to make a buck off it, right? A couple things I'm looking for. I want to sell off the high of this channel. That's the first thing here for tomorrow. Looking for a sell up around that battle zone, up above the moving average. I'm going to talk about a couple key setups to look for to get into that pullback. But if we don't get the pullback and the market runs lower, I've got to be careful here to stay away from that trading range. That range will probably be a little clue there to stay away from. In that case, I have another plan for it. But what if we drop, right? What if we drop? If we drop, I want to be a buyer off of this low. But because of all of that momentum going lower, I've got to look for one very specific pattern to buy it as we go. So 3 scenarios we're talking about tonight on the video. One is the pullback to sell. One is the back into the range. We'll talk about how to trade the range. And of course, if we dump, right, what's the plan? Can we sell it? Should we buy it? We'll break all this down to small bite-sized pieces tonight on that video. So not to worry here for the oil. Over on the S&P, of course, right, dealing with, really the world is digesting right now the change from $55 a barrel to almost $65 a barrel. So it is a pretty big adjustment that the global markets have to make. Because remember, right, oil is a big deal, right? It affects all the consumer prices, all the producer prices. So it's a big deal when that oil spikes like that. The rest of these markets have to kind of balance out. And you can definitely see this S&P, like a lot of markets, shot down down right in the pre-market and slowly kind of built its way higher here, trying to fill that gap up overhead. I see this right now as a trading range, and this range has a bullish bias to it. That tells me I'm looking to be a buyer underneath this range tomorrow, and we'll definitely talk about a couple key patterns. I'm looking forward to buy underneath that low. At the same time, though, I can definitely assume these buyers are trying to fill that gap. They're trying to fill that pendulum swing once again, right? That pendulum on oil was a really big factor here today. The pendulum swing on the S&P, I would assume, will also be a big factor there as well. So the bottom line is I got a bunch of resistance up here, and I'd like to be a seller off of that resistance, because after all, a range-bound market, buy low, sell high, avoid the middle. The problem with being a seller up here is that we're going against momentum. So we have to be careful which entry pattern we use to sell off of that high. So slightly different strategy for buying low than selling high. And of course, we'll talk about what a breakout will look like, right? How do we know when the market successfully breaks free? We'll talk about all those details tonight on this video. Nasdaq is very similar here to the S&P. It is very much a short-term bullish momentum, but we do have this market going sideways inside of a range. I'd like to buy down in my battle zone tomorrow morning, right on the Nasdaq. We'll talk about a couple key setups to look for there. If the market runs higher, I do want to sell as the market goes up to fill that gap, bring it back down into that range from today. And then again, I'm also watching for any potential breakout, right? And what a breakout in either direction may look like. We'll talk about breakout patterns tonight on that Nasdaq. And of course, how could we forget about the yellow metal? The gold is overall bearish right now. Overall bearish. Now we'll talk about this. The gold's got a lot of real important clues in this chart. We're overall bearish. We saw that big spike up, right? Well, I say a spike because anytime I see a gap like that, anytime you see a big gap like that, you know you've got pretty much a green candle, right? That's a big spike up. Now, anytime I see a big spike like this, I always know the buyers are going to be looking to retest that high before they let these sellers get that sucker back into that range. So I've got my one. I'm looking for a 2-try rule right now on the gold to short this sucker back down into that range. Now it may not go back to the highs here. We may end up around the battle zone here, but I'm looking to be a seller up in here for one more exhaustive attempt here, right, to go higher on that gold. And obviously, what if it breaks higher, right? What if it pushes through those highs? We'll talk about that tonight. What if it collapses back down? It is an overall range, as you can see here. We'll talk more details on this as we go into the video tonight. But that range tells me sell it higher, right? Buy it lower. Pretty easy plan on the gold, but a lot of moving pieces. So if you're a gold trader, you definitely want to make sure you stay tuned for more information on that. And the euro, pretty much giving us a layup here for us today with a strong bear market into a trading range. Range-bound markets, what do they tell us? They tell us to sell high. They tell us to buy low. They tell us to avoid the middle and keep your eyes out for those breakouts, right? What do breakouts look like? We'll talk about breakouts. Now, remember, because the market is overall bearish, I'm going to be a seller here, right? Because that market is overall bearish, I will definitely want to be a seller on this before I'm a buyer. I can be relatively aggressive on this here when I'm selling, but I've got to be a little bit more careful to be a buyer on that, right? To be a buyer on that euro. So we'll definitely talk about the buy setups. We'll talk about the sell setups on this as well. So we'll certainly break all of this down for you guys tonight, right, on this nightly newsletter. So we got the euro, we got some gold, I've got my Nasdaq, my S&P, and of course my crude oil futures. We're all locked and loaded here this afternoon for this nightly newsletter. But before we jump into the video tonight, I just want to make sure to encourage you to join our mailing list. You may not be aware of this, but right before I publish this nightly newsletter on our YouTube channel, I send out an email to everybody on our mailing list. That way, everyone on our mailing list gets the first crack at this video. And I want to make sure that you get access, right, to joining that mailing list, and you can get the first crack at this video every evening when it goes live. So joining our mailing list is very, very easy. All I need is your first name, a real email address, please, and hit that subscribe now button. And don't forget, when you choose to subscribe to the mailing list, your job is not over yet. You've got to go check your email inbox, because I'm going to send you a welcome email with a verification link. You need to verify your email inbox. And if you don't find that verification link in your inbox, check your spam folder. A lot of times those emails get stuck in that spam filter somewhere. So check that welcome email, click that verification link, and I'll start sending you an email every evening when our nightly newsletter goes live. Now, before we jump into the video tonight, I do want to remind you, if you have any questions about anything we cover in tonight's video, drop those questions in the comments section below. Whether you've got questions about strategies, charting software, data feeds, or pattern setups, drop those questions in the comments section below. And while you're down there in the comments section below, do me a favor, will you? Hit that thumbs up button for me, because believe it or not, every time you hit that thumbs up button, it helps me expose this video to more people, more traders who want to learn this three-step strategy. So definitely post those questions for me in the comments section below. And while you're down there, hit that thumbs up button. Every time you hit the thumbs up button, YouTube exposes this video to more traders who are dying to learn this strategy as well. So thank you so much for posting comments in the comments section below. Hit that thumbs up button. And don't forget, if the comments section is not your bag, baby, right, you're more than welcome to pick up the phone and call me anytime you have any questions. Toll free 800-381-2084. I've got live support. I've got that toll-free phone number. So drop those questions in the comment section below, or pick up that telephone and call me in the office. I'm standing by here to answer all your questions and help you get all the information you need to make this a great trading day. In the meantime, though, let's get this calendar checked up here for tomorrow. Let's jump into this video here tonight. Tuesday, September the 17th is right around the corner here. I do have a lot to talk about here tonight on this calendar. For example, on Wednesday, we have the FOMC meeting announcement. So it is Fed Day on Wednesday. Friday, it's Quadruple Witching. Now, we'll talk more about this as we get closer to these. We won't need to worry about the FOMC until tomorrow night, so we'll worry about that tomorrow night. We won't have to worry about Quad Witching until Thursday. We'll talk about that, right, Wednesday and Thursday. For right now, though, let's make sure we focus in here on tomorrow's trading session. Now, obviously, we're going to continue here to keep listening in to headlines from OPEC, right, and, of course, the price of oil, the S&P, and how the markets are responding to this increased price, right? We heard this week on the news headlines that the U.S. and China trade talks continue this week, right? And, of course, how could we forget the Fed and interest rates? So there's a lot going on right now between the violence in the Middle East, the turmoil in the Middle East, right, and OPEC and the price of oil, the trade negotiations between the U.S. and China, and, of course, the Fed and rates. All of those factors right now are playing in under the surface, and every time we hear a little morsel of news, right? Every time we hear that news headline sort of chirp in our trade room, we know the markets are going to be moving because of it. So tomorrow morning, I'll have the news feed running in the trade room tomorrow morning. We're listening in for more developments from OPEC, the Middle East, and of course the price of oil, the U.S.-China trade talks, and of course Fed and interest rates, because everyone's expecting that rate cut later on this week. Will that rate cut be a quarter point? Will it be a half point? I don't think anybody knows for certain right now. And, of course, we're listening in closely here this week to try to see if we get a tip-off here and some tradable opportunities that come along with it. Last but not least here on the calendar, don't forget, tomorrow we have industrial production at 9:15 and that housing market index at 10 o'clock Eastern time. That will probably be the big market moving events for tomorrow, pending obviously that we don't get any unexpected, right, announcements from the White House, from the Middle East, right? Who knows, right? So anything can happen tomorrow, but pending no further developments on this, we've got major news tomorrow at 9:15. and of course 10 o'clock Eastern time. Now don't forget, we're going to do this together tomorrow morning and every morning, Monday through Friday at 8 o'clock Eastern time, and I really hope I get a chance to see you there with me. So come out and join me tomorrow morning as a brand new member in our trade room. We open up every morning, 8 a.m. Eastern time, every Monday through Friday, and we'll trade the strategy together. Now, speaking of strategy, let's get these charts going here tonight, shall we? Opening up here now for oil. We got some oil, S&P, Nasdaq, gold, and euro tonight on the schedule. As I mentioned before, we had that big shot going higher here. Anytime I see a big strong move in one direction, I expect to see another attempt before we go back down to retest that low. Now remember that when we get to the gold chart. Okay, put a pin in that right now. Remember that clue. Anytime we see a strong move in one direction, and again, I realize it was a gap, but anytime I see a gap in the chart, it tells me it's a big green candle, right? That's all a gap is. A gap is a big green candle. That's all it is. So strong move up. Anytime we see a strong move, we're going to probably get another leg, and then I can expect that run back down, most likely over to that 58.67. Again, remember that idea when we get to the gold chart a little bit later on in this video. So now, going back to this now, get zoomed back in here again, because really all that matters here right now is this range from that top to that bottom. That's going to be our focus here, right, over the next couple days here, I would assume. Now, couple things here on crude oil. One, we are watching contract rollover around the 18th of the month. We always start looking for rollover. I always tell my clients, as of the 15th of every month, start thinking about contract rollover. And right now, it's looking like contract rollover will probably be either tomorrow, right? Either tomorrow or, let me grab that oil here right now. You'll notice volume here on the oil. If I can really quickly zoom in on this one, right? Crude oil, 1019, 1119. We're currently, as you can assume, on the 1019. That's a lot of volume on that oil today. Once that 1119 has more volume, we'll make the switch over to that 1119 contract. It's supposed to happen tomorrow, but who knows? So tomorrow morning, if you come in tomorrow morning, get to your desk, 7 o'clock, 8 o'clock Eastern time with me in the trade room, if 1119 has more volume, we'll go straight to the 1119 contract and get rid of the 1019 contract. So we're watching right now. We don't exactly have all the information we need, but we're paying close attention to that contract rollover. Now, what else do we know about the oil? We know the market had that little tiny trading range right at the beginning of the session. Now, honestly, at first glance, I didn't think too much about that trading range until I put the range on the chart, and then I realized, holy Christmas, look at the pendulum swings here. The amount of the move above the range was the exact amount of the move, well, not exact, and it doesn't need to be exact. It's very, very close. The amount above the range was almost the exact amount of below the range. It was like a tick off, right? Then we went all the way back up, and guess what? Yeah, it's the same amount. So if history keeps repeating itself, we should be back down now to around that 58.67. Now, my exact words this morning in our trade room were, we had that big strong move up. I was expecting a retest of that high and then a run back down to retest those lows. And I still do think that's exactly what we're looking for here tomorrow. Then, what else do we know? We know that range is in play. We know that range is a magnet. What else do we know? We had a very strong run up. Now, what does a strong run higher do? It's going to want to retest that high. Now, how many attempts will we give those buyers to retest it? 2 attempts. They tried once, and we're looking for them now to try twice. So imagine now, and again, this is kind of like a macro to a minor look, right? Macro, we got the big strong run up, and we retest the high. In the more micro view, big strong run up, trying to retest that high before we run back down in, right? So let's zoom in on this area here, because this is where things start to get a lot more interesting. Now, they got that big run up, And you'd expect those buyers would have no problem retesting that high and possibly hitting that 65 number and ringing the bell at 65, but they couldn't get that double top. They couldn't get the retest, and they peel now off the high. But look at that move off the moving average. Very strong. A very quick reversal of momentum here right now. I call this a 1, 2, 3 reversal off of that high. And what I'll do now is mark up off of those lows, put it up now to those highs, and create that now as a channel. So that becomes a very, very reliable and very attractive area now for sellers to sell this market, to complete the move back into the range, and possibly hold a runner all the way down to that pendulum swing, down to that 58.67. So again, it's a bull move up. The buyers should have been able to retest that high. They've tried once. They'll probably try again at some point, and if they do, that's where I want to sell, right? Give them the 2 tries, let them try twice to retest that high, and of course, I'm now looking to sell this thing back down into that range as we go. Let's talk about the specific entry pattern now that we want to look for on this, because that's going to be the most important thing now. So if we do run back up into that trading range now, or sorry, back up to the high of that channel, what's going to happen is that moving average now will come underneath. Okay, that moving average come underneath. And as the moving average comes over, buyers will now try to buy that pullback off the moving average. Now, this is one of my favorite pattern setups, right, called a failure pattern. Once I see those bears trying to buy off that pullback, now I know exactly where those stop losses are. Most importantly, I now know where the pain begins. That's the most important factor. Once I have the pain point, now I can sell right into the pain point, right where, if I was a buyer, right where my stop loss would be, and sell it back down. Now, oftentimes, this failure pattern will turn into a pullback pattern shortly thereafter. So keep your eyes on that combination. Again, it's a failure pattern. It's a buyer pullback failure into, right, a bearish breakdown pullback. You can see a very similar example here. We go up above the moving average. The buyers try to buy it. What happens? They fail. We run lower, quick little pullback, and down from there. Failure pattern into pullback pattern, and back down to retest that low. So very, very similar situation, right? Want to go up, 1 try, 2 try, off the moving average, find the pain point, sell into that pain point, sell the pullback. Target is where? Back into the range, and of course, the opposite side for the pendulum swing. Now, what if we don't get that pullback? What if the market grinds lower here, even goes back into that range here? If we don't get the pullback, what I'll do is I'm going to keep using the lows of this move to keep finding that channel. And honestly, not much changes. If we still keep grinding lower, I'm looking for that pop above, up to the high of that channel. Buyers try to buy off the channel and looking to sell, failure into pullback combination as we go back down again. The one thing you do want to be careful of tomorrow is if we do get stuck back inside that range, if we sit back inside that range, just be aware, stay away from the range middle, buy low, sell high, and anytime we see a trading range like this, I want to wait for that pop up, get those buyers, try to buy that pullback. We call this the 2 try rule, and we'll sell, right? Let them try once, let them try twice, and we're selling right into those stop losses as we go. So imagine now we run back into that range, we go sideways for a bit, get all chopped up there overnight, break out higher, moving average comes up, buyers now try to buy that pullback. We know it's bearish. We know we want to sell above the top of that range. Nice, easy failure setup to sell it back down again. Now, the one thing I'm concerned about, though, is a lot of news going on right now. Who knows what's going to happen here, right? Something could happen here and price could collapse. So imagine now price really takes off the downside now. How do we buy underneath this range? That's going to be the hardest part, in my opinion, to trade tomorrow morning. Really what you want to remember is the sellers are trying to get down to those lows. But they've got to prove to us first they can get through this range. So this is going to be a little bit of a tricky one here, because what you're going to want to see is you're going to want to see price to run through that range. For me to be a seller, I want to see what I call a 1, 2, 3 breakout. And really what that means is I want to see it 1, 2, 3 and really run through that range, almost as if there's no range there at all. And once I get that momentum push, I'm going to mark up that low, mark up that low, mark up my new high of that hidden channel, and look for a sell off of that high, with the goal of being down to that pendulum swing as we go. Now, I want to make this very, very clear, though. I do not want to take this type of trade if the market sits inside that range. Okay, if it sits inside the range, now what you want to do, if it sits inside that range, now what you want to do is treat this like a range, okay, which means buy low. So if price goes lower now we want to use a slightly different pattern called a nested failure. Wait for that move down. The moving average comes over. Sellers will try to sell once off the moving average, higher high, twice off the moving average, once and twice. Once we've got those bears trying twice, now we know where their pain is, and now we can buy it right back up again. Okay, again, range-bound market. Buy low, sell high. So again, if we just run through this low, right? 1, 2, 3, big move down, strong move down, mark the low, mark the high. We're looking for that sell now. Again, down to that pendulum swing. But again, make no mistake, you've got to see a lot of momentum here to the downside. If we go back into that range and sit around here for a while, now it's nothing more than a range-bound market. It's the 2-try rule to sell above that high, right? And of course, it's the nested 2-try. It's the strong move down, 1 try, 2 try. And again, notice how I draw this. Higher highs on those 2 tries, 1 try, 2 try, and we're buying going back up into that trading range. So some food for thought here for trading crude oil tomorrow. Looking to sell up above that high, right? If we do go lower, I'm still waiting to sell high here. And boy, oh boy, looking forward to another great setup here tomorrow morning in our trade room. Now, I want to make the move now over to the S&P. Before we jump into the S&P chart tonight, though, I just want to make sure I give you guys a deeper dive into all of the setups we've talked about so far on this video. What I'll do is I'll put a link in the upper right-hand corner for you for our free trading course here at School of Trade. Grab that free course if you're brand new here watching this newsletter, or maybe you just haven't got a deep dive yet into our failures, our pullbacks, our strength patterns, all the patterns we use here in our trade room as part of our 3-step strategy. I'm going to go into a much deeper dive. That way you can get the most out of your time with me every evening on this video newsletter. So grab that link in the upper right-hand corner. I'll also put a big red button for us here tonight, right below the video tonight if you're on the blog here at Sideways Markets. But if you're on YouTube, hit that link in the upper right-hand corner, join that free trading class, and we'll see you guys right in that free course. In the meantime, though, let's keep moving. Let's keep moving over now to the S&P. What do we know about the S&P right now? We know the S&P, right, had that big gap, right, that big gap down. What do we know about a gap down? It might as well be one big red candle. Now, what does that tell us? That tells us with that strong move down, we should see sellers try to make another run at that low. So don't be surprised if those bears take one more swing at that move lower. Now, at this point, it looks like those bears, it looks like they tried once, they tried twice, and it does look like those bears are running on borrowed time here right now. It does look like those bulls are probably going to go up and fill that gap tomorrow, right? And possibly back into that range here overhead. What else do we know? We know we spent most of the day today chopping around inside this range. This range obviously has a bullish tone to it here. That bull bias says look for buying opportunities using counter trend seller, in this case, failure patterns off of that low. So a very good example of what we were talking about earlier on crude, right? Crude, you want to sell above that high with a 2-try failure on the S&P, buying underneath that low with a 2-try failure. So we know we have this trading range. We know we have a bullish bias into that range. Now, once I have that range, I'm going to use that pendulum swing. The pendulum swings below, swings up overhead, and now we can see some key levels of resistance starting to form at that 30.18 and change area overhead. I'm also marking the measured move, right? Leg up. Number one, leg up. Number two, there's your measured move there. So really this whole area up here, right, is considered to be a lot of overhead resistance. Now, what else do we know here? We know we're bullish. We know we've got that trading range. Don't forget, we are trading on the 12.19 contract. We did successfully get rollover late last week, early this week, so make sure you're on the right contract here for the S&P, right, that 12.19 contract. And really at this point, we're trying to find a way to buy this market before it gets back up to retest that pendulum swing. And there are a couple different ways I want to do it. First one is I want to try to use this trend line and buy underneath that range, right? It's a range-bound market. And so, of course, this being a range-bound market, I always want to buy underneath that range. That's definitely something I'm watching here for tomorrow. What if the market goes higher here? If we go higher here, the only way I can buy this is with a very, very strong move higher. And with that strong move higher, I'm going to need to see that two-try breakout pattern. That strong move up, that one try for the bears, that two try for the bears, and a trap low. So the first way I want to buy this market is the more aggressive of the two, and it's what I call a two-try breakout. It starts off with a very strong break higher. That's the key. It needs to be a very strong break higher. Then I want to see profit taking. That'd be the first pullback. From there, higher high, and I want to see sellers try a second time to sell it. Now, once those sellers try twice now we know we've got those stops just begging to be hit. And with a nice trap low, again, I call this a two-try breakout pattern. Strong move, that's the key. Strong move up outside that range. One try for the bears. Higher high, two try for the bears. Trap low, and we're literally using the seller's stop losses here for the fuel to push this thing up through that momentum swing. Now, make no mistake about it, I do not want to take this pattern tomorrow if we already get the pendulum. So if this thing just shoots higher here overnight, we're done, right? I'm not trying to buy that market any longer. I'm using that pendulum as my target. Strong move up, one try, higher high, two try, trap low, and buying that trap low. Again, it's called a two-try breakout. Now, that's the more aggressive of the two setups. What I'd much rather get is a move underneath that range. Now remember, range-bound market says buy low, sell high, avoid the middle. If I can get underneath that range again, I can get the moving average coming over, get those sellers trying to sell off that moving average, and I can be a buyer right into that failure, right into those stop losses. If I really play my cards correctly here, right, if we really get the trading gods to bless us on that pattern, we'll get that nice strong move back off that trend line, of course. Moving average comes over, it's a failure into a pullback combination. Now, sometimes these pullbacks, they end up happening right inside the range. You know, for example, back here, right? This is a great example back here. Strong move down. The bears now come in, try to sell off the moving average. That's your failure pattern right there. But you'll notice the pullback happens right inside the range. You want to stay away from those types of patterns because you're inside the range. It's just not a very reliable spot to be doing it. So pullback, moving average comes over. Sellers, of course, now commit off the moving average. Now we know where their pain point is. It's not a bear market. It's a range market right now. Range says buy low. That's exactly what I'm doing here. Buying low underneath that trading range, staying out of the range, right, and buying underneath it. Failure into pullback combination. And again, I've got that, right, one try, two try, that two try trap low there before we get back up to finish off that pendulum swing. Now, how do we sell this market? Can we sell this market? We definitely can, but we've got to be careful. With this bullish momentum now, what I'm looking for is the only way I can successfully sell this is that crown reversal. The same basic idea we talked about on oil, to sell oil. We run up, the buyers will try to pull back off the moving average, right? The moving average comes over here real quick. moving average comes over, buyers try to buy off it, but they don't retest the high. Now we pull back, the buyers try again, right? And I want to sell. Again, think about it, right? The buyers have momentum. They're not going to stop trying to buy just because that first pullback fails. If it was a bear market, they would, right? If it was a bear market, we'd be selling right into those stop losses. But it's not a bear market. It's an overall bullish move here right now. I understand, gap down, but look at the short-term momentum. Okay, short-term is bullish. So let those buyers try once, get that lower low, let them try twice, then we can dump this sucker back down into that trading range. Don't try to force that short off the top. Now, what's a breakout look like? Breakout, 1, 2, 3 breakout. Strong move up, 1, 2, pull back to the moving average, 3, jump off the moving average. That's the key here, right? We got to get that 1, 2, 3 breakout. We've already got this move going higher here right now. Let's get that moving average coming over, get that pullback, and jump off the moving average. If we can get that 1, 2, 3 breakout, again, strong move up, pull back to the moving average. If we can get that strong 1, 2, 3 breakout, I'm going to mark up that high, that trend line, bring it down to that low, and we're looking to buy off the low of that new hidden channel. Now, where's my target at that point? My target up there at that 30.25, right? That's that prior high. Again, this is the 12.19 contract. Keep it in mind, right? Prior high, right, from late last week. So now we know what a breakout looks like. We know what the buy setups look like. We know what the sell setups look like here. What else do we have here right now tonight? Over on the Nasdaq here. Don't forget, guys, and again, don't forget, I've talked a lot about these patterns so far. I want to remind you, by the way, again, right, grab that free course in the upper right-hand corner or hit that big red button below the video tonight on the trading blog. That way, right, that way you've got all the information you need so you can get the most of the time together here on this video. What else do we have here right now? On the Nasdaq. So Nasdaq's in a very, very similar, right, very, very similar boat here right now. Nasdaq is overall bullish, as you can see. We've got this trading range here. So how do we buy this market? Very carefully, right? Very carefully. Now, there's really two easy ways to buy this market. I want to get underneath this range and buy low, or I've got to go through this range before we get back to retest that high with that 2-try breakout pattern. Remember that from earlier on the S&P. So first one, let's say we do get that pullback. Moving average comes over. Sellers now will try to sell off of that moving average. Now we know where their stops are. We're buying into those stops. We're buying off that pullback. That's a relatively easy pattern here underneath that range. Just remember, don't take the pullback if it ends up doing this, right? If it goes like this and goes up into that range, be very careful, right? You don't want that pullback now, okay? That's a pullback you want to skip, because you're right into that trading range. I want to grab that pullback before it gets into that range. That's the goal. Okay, and sometimes you got to walk away. Sometimes you got to ignore a couple patterns here. You know, for example, I can take that failure pattern, but I can't take the pullback pattern. I know it's not fun to miss a trade. You didn't miss it. You purposely chose not to do it, just like any other business where you purposely don't involve your cash flow in certain business opportunities, right? Think of real estate investing, for example. Would you buy every single home that you saw on MLS? Probably not, right? You would pick and choose which property fits your risk profile, your long-term goals, right? Just like day trading. Pick the setups that fit your goals the best. And if you want to learn my goals and my plan, like I mentioned earlier, make sure you grab that free course in the upper right-hand corner or that big red button below the video tonight on that blog. Again, strong move up, real strong move up. 1 try for the bears, 2 try for the bears, right? Buying that trap low, that's called a 2-try breakout pattern. You'll learn more about those inside the free trading course. What else? Right? How do we sell this market? How do we sell this market? Go up, 1 try for the bulls, 2 try for the bulls. You got it. What do we call this? We call this a nested failure. Again, we know we want to sell up here, right? We know we want to sell up here. We just can't sell directly into those buyers, right? Give the buyers the benefit of the doubt. Let them try it once. Let them try it twice. Then we can sell it back down into that trading range. Or maybe we get that big 1, 2, 3 breakout. Big move up, pull back to the moving average, runs off that moving average, jumps off the moving average, mark up that high, mark up that new channel, and now looking to buy off the low of that new hidden channel. Where's my target? Target's pretty easy on that one, back up to that 8,000 around that big high of day. Same thing goes to the downside. 1, 2, 3 to the downside now. Strong move up, right? Strong move down, hold the pullback. And at this point, we're trying to be a buyer or a seller before we get to that low. It's going to be a little bit tricky here, trying to be a seller on that Nasdaq. We may not get a very easy way to thread that needle to retest that low. Better off if it runs lower like this, better off just wait for, right, that failure and run it right back up into that trading range again. So Nasdaq, very, very similar there on the right as the S&P. And of course, looking forward to a great day tomorrow here on those E-minis. How about some gold here? Over on the gold tonight. So a lot to talk about here on gold, but to basically boil it all down, the most important factor right now is this big trading range. This range, of course, coming from earlier on in the month. Every time the market goes up, it comes right back down into it, right? Goes up, right back down in, up, and then probably right back down into that trading range again. But there's one problem here, though, and that is, yes, I can definitely see there is overall bearish momentum. No doubt about that. Overall momentum is bearish, and it does look like the bears got their shot to sell it back down again, but I got one big concern here. That big strong break higher here, right? That gap up. What is that? That's one big green candle. Now, we talked about this earlier on oil, and I told you to remember this point here on gold. We got that strong move higher. What do we usually get when we get a strong move in one direction? We usually get a retest of that high before we can start thinking about being a seller. And that's exactly what I'm trying to, that's what I'm hoping we get here on that gold. So overall, it's a range-bound market. There's definitely that overall bearishness, but you've got that big spike up. And that big spike up leaves the door wide open for one more run here for these bulls. And at that point, I want to try to sell this thing back down to retest that low. That's my goal. It's a range, buy low, sell high. It's a range, buy low, and sell high, right? It's a range, buy low, sell high. Now, where can we sell? We want to sell at resistance. The best way to do it is to mark up those lows, find that hidden channel up there, and look what I did here. I'm marking up this kind of trend line overhead, and that's creating this little sweet spot right up there. Now, I'm not too picky about this. I just want to get it up inside that 1410 to 19 area. But I'll tell you, I would love to get that trend line hit. I'd love to get this market to go up, get up into that trend line, get the moving average coming over, get the buyers to try to retest that high. Now we know where their pain point is. We can sell into those stops, wait for that pullback as well. What I always tell my clients is you can either sell into the failure and add to your position off the pullback, or skip the failure, wait for the pullback, or go full size on both patterns. There are lots of different ways you can do this depending on how big your account size is, how confident you are in that failure, etc., etc. We'll talk more about that obviously tomorrow morning in our trade room. But getting this market up and selling it back down. Now, what would a breakout look like on this? How would this market break out? Well, what if we get a strong move higher? And what if they hold that pullback? If they hold that pullback now and run, that becomes a breakout. That's a breakout of this range. And at that point, I'm going to mark up that high, I'm going to mark up that low, and look to buy, right, that pullback off the low of that hidden channel. And when you think about that pullback, guys, that pullback, when I say pullback, I don't necessarily mean a pullback pattern. What I really mean is, kind of imagine now, if you were to zoom in on that area here, right, starts on the other side of this chart here, but imagine now that being a failure into a pullback combination. A lot of times this will happen. A lot of times it'll go below the moving average, right? So again, imagine that kind of zooming in that area there, right? A lot of times that failure into pullback will come up off of that hidden channel low. So just some food for thought there, right, on that gold as we go higher. Now, where's our target as we go higher? That's an easy one, right? Back at the 1532, 36.3, right? Those are clearly going to be some big levels here overhead. We'll definitely be watching here on that gold. But what about being a seller, right? It does seem a little bit unrealistic, right, for this to push too much further, right? But how do we buy, or should I say, what if the market goes lower, right? What if we don't, right? What if we don't pull back and sell high? What if it runs lower? Well, first of all, if it just runs lower here and grinds lower, not much changes. We're going to still use that channel, and we'll still wait for that pop up. The moving average comes over, right? Buyer failure. You get the point, right? Buyer failure in a seller pullback. Again, just making sure we're aware we don't want to trade inside that range, right? So make sure those pattern entries, failures, pullback patterns, make sure those pattern entries are just above the top of that range. You don't want to get caught trying to be a seller inside that range. What if the market kind of runs back into this range now, though? Then what do? We sit on hands. We buy low, we sell high, right? Up 1, 2, sell back down. 2-try rule. What about going lower, right? What about going lower? If we balance out here, right? If we balance out inside that range, I'll use the same basic strategy, 1 try, 2 try, back up into that range. So if we do balance out inside that range, right? In other words, the market starts going sideways, the moving average goes sideways, we run lower, yeah, fade it, right? Buy low, sell high. Look for the bears to sell off that, right? Off of that low and back up into that range. Bears try the breakout. Bears try the breakout pullback. I talk about this quite a bit on this newsletter. Rookie traders love breakouts, and the only thing that rookies like more than breakouts is breakout pullbacks. So I always sort of skip the breakout, but wait for the breakout pullback. That will tell you where their stops are, and that's where everybody's getting beat up, right? That's where everybody takes a loss. All the bears are in pain above that high, and that's where I want to be selling. Once I see that breakout pullback pattern trigger off the moving average, that's exactly where I know where I get that failure pattern setting up here. Now, what if the market runs, right? Again, the first scenario is we chop around inside the range, but what if we run lower? Then what do? I do want to be a buyer down here, right? Remember, we're below the range, right? I want to buy low here, but how do I do that if it runs lower? If it runs lower, now this becomes a very, very bear market. And what's the best way to buy in a bear market? What was that pattern again? It was called a nested failure, right? Let those bears try once, higher high, try twice, you got it. Looking for that, again, I call it a nested failure because it's a failure inside of a failure, basically, right? And again, the reason why I look for 2 tries is because the sellers, they're not going to give up that easily. They're not going to give up without a fight. They're going to try a second time, and once those bears try a second time, bingo. Now I've got you exactly where I want you. Now we can buy right into those stop losses. All right, guys, so definitely looking for that 2 try to buy off of that pendulum swing, going back up into that trading range. And guys, don't forget, if you want that deeper dive into everything we're talking about here, hit that big red button for the free course underneath the video on our blog here tonight, or grab that link in the upper right-hand corner or in the description of the YouTube video here tonight as well. Last but not least here, over on the euro. The euro kind of teed this thing up for us nicely here tonight. Made my job pretty easy to finish up the video with you guys. Strong bear move down into a trading range. First of all, what do we know? We know the market's range bound. What else do we know? We know there's a bearish bias to it. What does the range tell us? It tells us buy low, sell high, avoid the middle, focus on failures. What does that bear momentum tell us? It tells us that what goes up, I can look to be relatively aggressive to buy into a buyer pullback failure. Failure into seller pullback back down to retest that low. Right? Again, we go higher here. You know, imagine now all of these bears, there'll be a lot of Fibonacci pullback sellers up here, right? 382, 50, 60, right? So as the market goes higher, unless we see that 1, 2, 3 reversal, we've got to be thinking sell up here. Now, trying to sell into a pullback like that, it's very difficult to pick that top correctly, right? It is. It's very difficult to have a small stop and try to predict how far the market will pull back, right? I mean, that's the challenge. My solution to that challenge, instead of trying to predict how far it'll pull back, I wait for the pullback. I know that pullback will have rookies trying to buy that pullback off the moving average. I know that for a fact because that's what I used to do. Okay, the problem is it's not a bull market yet. It's a bear market. So once I see those bulls try to buy that pullback, then I know exactly where their pain points are, and I'm selling now into that pain point. Because the buyers, when they get stopped out, what happens? They're forced to be sellers. That means you've got sellers selling and the buyers now are selling as well. That's my preferred way to sell off that high. Now, if they can hold that pullback, right? If the buyers can hold that pullback and jump off the moving average, well, now what do we call it? We call it the 1, 2, 3 reversal. 1, 2, 3 breakout. Again, mark up the highs now. Don't chase after it, guys. Wait for the pullback. We wait for that pullback off the low of that channel. Now, a heads up on this. This, again, has to have a big, strong jump off that moving average. And a lot of times that pullback is fast. And you really got to be on your game to get in off that pullback. It'll happen very quickly usually. And of course, the target now is back up to retest those highs. Now, how do we buy underneath the low? As we go lower here, we are bearish. And we're not just technically bearish, right? We're definitely bearish overall. Strong dollar right now, weak euro. So how do we go against that long-term trend? We need that nested pattern. Good, you're picking up on that now, right? Why? Because I'm not gonna. The bears, they're not gonna give up as easily, right? Like back here. Strong move down, bears try once, bears try twice, right? Strong move down, bears try once, bears try twice. Then I can be a buyer going back up into that trading range. And don't forget, if we sit inside the range, you sit right on those hands. So watch out for those 1, 2, 3 breakouts. Pick your spots wisely, buying low and selling high. Focus on failures when it comes to that range-bound market. And don't forget, guys, tomorrow morning we'll be in our trade room like we are every morning, Monday through Friday, 8 o'clock Eastern Time. I want to see you there with me. So don't forget, come out and join me tomorrow morning at the opening bell, 8 o'clock Eastern Time. I'll put all the links in the description of the YouTube video. If you're on the website right now, there's a big blue button right below the video tonight on the trading blog, or go to the website here at School of Trade and get registered as a brand new advanced member. Guys and gals, if you have any questions about membership, any questions about anything we've talked about in this video, don't forget, drop in those comments in the comment section below. Hit that thumbs up button. I really appreciate you guys tuning in every evening on this video. And don't forget, don't be a stranger. I'm always here standing by to answer your calls, answer your emails. I know you're probably alone at your computer right now watching this video, but you're never alone on your journey to becoming that confident trader that I know you want to be here every evening on this newsletter. So be well out there, be nice to each other, and be here next time, will ya? We'll see you guys next time. Adios, amigos. Bye-bye for now.